Let's get a check-in on Levi's shares continuing their move to the upside this morning after topping first quarter earnings expectations and maintaining full-year forecasts. The jeans maker excluding the effects of President Trump's tariffs, with executives saying they anticipate a minimal impact near term. Still, the company says it may be required to modify sourcing practices, which could impact product costs. Joining us now, Harmit Singh. He is Levi Strauss's Chief Financial and Growth Officer. Harmit, it's great to speak with you. So you are keeping your forecast, but you said that it assumes no deterioration in the macro environment. Can guidance be guidance right now if it does not include the impact of tariffs?
Good morning. Thanks for having me here. As you know, we reported a very strong start to the year. Our quarter one beat top line and bottom line expectations. Organic revenue accelerated. We were up 9%. Our EBIT margins expanded and were up 400 basis points, and EPS was up 52%. So overall, a real strong start to the year. Our transformation strategies are working as we pivot to a DTC first lifestyle company. Our DTC results, which is direct to consumer, which includes our stores and e-commerce. It was up 12%, 12 consecutive quarter of growth, and what I like to call a trifecta, which is, we're growing comp sales, we're adding profitable new stores, and we're growing e-commerce. And so, a real strong start to the year and good momentum. To your question about guidance, Madison, it's early days. Yes, the tariff that were imposed have created more uncertainty. We are best positioned to navigate it. The situation is very fluid. And the way we think of guidance is it's important to give expectations when we are clear about the expectations. We are very clear about quarter two, and we guided quarter two, which is again, growing 3.5% to 4.5% on an organic basis. Gross margins continue to improve, and we guided our EPS expectations. And so that's the reason we stuck with the full year guidance. Just before the announcements of tariffs, given the results we had in Q1, we were debating whether we should take up full year guidance. But given that it's just the beginning of the year, and then the announcement on the tariffs, we felt prudent at this stage to maintain our full year guidance.
Understood. So I know that you've also, as part of that, introduced a tariff task force internally. Our sourcing indicates that some items that you have could increase their cost by as much as 100%. Does that feel accurate to you?
Not entirely, only because if you think of our supply chain, yes, so first we have got a task force. The task force is working 24/7. It's how we have managed other, previous crises, and we've actually, being a company that's been around 170 years, we have navigated through them, emerged stronger post the crisis. The task force is really looking at all options. They're looking at cost management options. They're looking at how we manage and talk to our different stakeholders, customers, our vendors, who we have long tenured relationships, and also looking at pricing options, from that perspective. To your question about a diversified supply chain, we source from 28 different countries, and not any country makes up more than 25% of what we source from. Into the US, we source from 20 countries. We have the product already for spring and summer, and that's why we were very clear about expectations for quarter two.
Harmit, this is Nancy Tangler. I'm a native San Franciscan, so Levi holds a very special place in my heart. But I'm wondering if you anticipate any retaliatory demand issues from some of our trading partners.
Nancy, we haven't seen any retaliatory pushback from consumers. As a brand, we've been present internationally for over 80 years. We have deep connections with the consumers. We are an American brand with a global presence, and 60% of our business is overseas. And so, as far as we are seeing, International, as an example, was up 9%. 75% of the apparel market is outside the US, and we are connecting really well with the consumers globally.
All right, Harmit, we have to leave it there. Thank you so much for joining us. Really appreciate it.
Thanks, folks.